Number one, don't use everything you're qualified for.
Me, it's all about the communication. Make it fun, make it a joke, whatever. But it's like, usually I'll tell mine like, hey, you're rock solid. You're good to go. Just don't go buy a Ferrari or any yachts or anything like that. I just make it kind of fun. But I go in all serious, jokes aside, don't
a lot of people don't know this, but not only right now is it really hard to get under contract, whether if you're a seller, it's pretty darn easy if you're a buyer. But right now, more than any time in the last 20 years, more deals are dying once they go under contract before they get to close.
If you like your payment, you're okay with the rate, and you like what it's paying you back, it's a free loan, you're going to be getting out of it in the near future, just go ahead and lock it in.
Hey, what's going on, guys? Chad Sabalka here, as always, with my brother Garret Townsend. This is Burn the Ships, and today we are doing a special little Halloween real estate episode. So we're going to go through some real estate topics with a little bit of Halloween twist to them, how you can avoid some of the pitfalls we talk about, and not get scared as you go through the world of real estate. First of all, GT, how you doing, brother?
Man, I'm good. I'm excited for this. I feel like the last one we did was so heavy, and I watched it last night, and I was like, dang, man, I was intense. You know what I'm saying?
For good reason.
Yeah. So I'm looking forward to this one. Let's just have some fun, man.
Yeah, this is going to be a more fun, lighthearted.
Yeah, our Halloween horror addition to the industry. And yeah, let's have some fun.
Yeah, let's dive into it.
All right, so the first one that we pulled up was the pre-approval ghost. And oh yeah, right? Like that one that gets to the underwriter and, you got pre-approved, everything, it gets to the underwriter, and all of a sudden it turns into a ghost.
Poof. Disappears on you.
It just disappears. Obviously, because this is my arena, I mean, we could talk about why that happens. And I think the biggest reason that happens is, let's face it, there's a lot of lenders out there that really don't know what they're doing. You get a lot of people that go online and they get pre-approved, even if it's the broker that's working in his flip-flops in the basement. I mean, he's probably paying attention to every deal because he probably doesn't have that many deals. But when you're getting pre-approved by Wells Fargo,
Rocket Mortgage,
Chase, Rocket Mortgage, any of those
Quicken Loans,
Lending Tree, something or another, whatever it is. I mean, those guys get so many calls a day. Like, they're literally just blasting through borrowers, like just trying to get through their day. And so I think
you're just a number to them.
You are.
Yeah. You're call number 63 of the day. The initial person you talk to in those circumstances, their one job is to get you pre-approved and on to the next guy. And then that's it. You're done.
Yeah, and usually that pre-approval consists of, what did you tell me that you made? It's, hey, fill out this app, or they take 10 different pieces of information down and they go, yep, you're good to go. You can afford to buy this. The reality is, guys like us, I mean, I'm either pre-approving somebody that came to me from one of my realtors. The last thing that you want to happen is for me to say, yeah, the client's good, they're good to go. And you go get them in the car, show them 20 houses, spend hours of time with them and get them under contract, negotiate the contract, and all of a sudden there's a problem.
Yeah, there's a twofold problem with that. Number one, you're wasting, there's three: time, money, potentially, if they've already gotten to the point where they've done inspections on the property, stuff like that. They could be out $1,000 or more dollars. Number three, and I think the most significant, is emotions. Yeah. Buying a home is super emotional. And if you're to the point where your underwriting is going to really let you know what, on a typical deal, 2 weeks into the deal, thereabouts is when you're going to be headed towards conditional approval and final approval. You're emotionally in love with that house. You've picked where your furniture is going to go, which room's going to go to which kid. You've started calling movers and getting boxes, and you're packing your house. And then all of a sudden, your pre-approval disappears like a ghost because the lender didn't do his job.
Yeah, didn't do the job up front.
That sucks.
And the big thing too is, a lot of times, I'll say it. Buyers have been known to be liars, but it's your job to get the information up front that's going to ensure that that pre-approval sticks, right? There's always the weird stuff that can pop up. I mean, it could be you do a property report on the client. I forget what they call it. They pull it up and all of a sudden they're like, hey, did you know they own this property in Florida? And, maybe they own it free and clear. So the mortgage didn't pop up on the credit, but they've got taxes and HOAs associated with it. And now all of a sudden, you have a DTI issue or something. There's always the things like that could happen. I mean, 2 weeks into it, it should never happen at that point. And the reality is 95% of the time or more, it shouldn't happen up front. I mean, again, a lot of times when that happens is just because you've got that lender that, again, is just pushing pre-approvals out just to get through his day versus the guy that's like, hey, not only do I want to make my realtor look good, but I've got an opportunity to win over the listing realtor, right? I've got an opportunity to win that realtor over, do a great job for that realtor, and now that could potentially be a new business partner for me.
Right.
So it's just a different mindset, different professionalism, just different way of looking at it.
What are some things that you think a buyer can do to avoid that? Not just picking the right lender. Correct me if I'm wrong. Number one, don't use everything you're qualified for. If you are already pushing 55, 58% of what you're able to borrow, you're already setting yourself up for failure, first and foremost. Failure. Yeah, absolutely. And then the second thing is do what your lender tells you to do, but more importantly, don't go do something they tell you not to, i.e. open a new credit card, buy a new truck.
Right.
Anything like that, because that'll make your pre-approval ghost. And they could be working with a rock star lender like you, and buyers can do it to themselves. So be cognizant of the advice that you're getting from who you're working with.
Yeah. And again, it could be the lender. I mean, I don't want to say like me because I communicate these things to my borrowers, but it could be the lender that's a pretty decent lender, but just assumes that the client understands and knows these things. Well, they could be a first-time home buyer and they don't have a clue.
Right.
So, for me, it's all about the communication. Make it fun, make it a joke, whatever. But it's like, usually I'll tell mine like, hey, you're rock solid. You're good to go. Just don't go buy a Ferrari or any yachts or anything like that. I just make it kind of fun. But I go in all serious, jokes aside, don't start buying any furniture and opening new credit or any of that stuff until after we're done.
Yep.
If you need to do something and it is a need, please discuss it with me prior to. Yep. And especially if we're in that process. But other than that, it's just good communication, right? So, yeah.
Don't let your pre-approval ghost you.
Don't let it ghost you.
All right. What's number 2?
All right. So number 2, the graveyard of dead deals.
This one was one of my ideas. So a lot of people don't know this, but not only right now is it really hard to get under contract, whether if you're a seller, it's pretty darn easy if you're a buyer. But right now, more than any time in the last 20 years, more deals are dying once they go under contract before they get to closing.
Yeah.
There's a multitude of reasons why.
Let's talk about them.
Yeah.
Because I've seen my things from the lending side, but it usually is more happening on your side, negotiating, all that stuff.
Well, that's because, like I said, you're a rock star lender who makes sure their buyers understand. One of the biggest reasons from an Inman report that I was reading was buyers don't understand their numbers fully when they go under contract, or they get cold feet after the fact. So having, number one, a lender who fully pre-approves you. We're going to keep going back to that.
Yeah.
And not only that, before you offer, if you have a good lender like Garret, your agent should be able to email them the MLS number, send them the taxes, send them if there's an HOA, so that before you're even presenting the offer to the seller, within a couple of bucks, realistically, of what that monthly payment's going to be and what your closing costs are going to be.
Yeah.
I think that, according to this report, was a leading reason as to why deals are falling apart.
Yeah, it could be maybe they didn't update their pre-approval, right? It could be one of those things where you haven't heard from them for, a month or so. And let's just say rates were down when I first initially talked to them. We were at 6 1/8, but something happened in the market and they popped up to 6.625.
Yep.
And all of a sudden their payment's higher than they thought. They didn't go through the taxes, whatever it is. I mean, I always encourage my clients, and that, it's like, hey, if you see a house that you want to go look at, let's run all the numbers. Have Chad send me over the MLS sheet. I can see the taxes, HOAs, all that fun stuff. We can go through where current rates are now, make sure there's no surprises there. And the idea of going under contract on a house and all of a sudden the numbers are different than you thought they were going to be is just absurd to me. So, yeah.
So 2 more big reasons. Number 2 is, given the amount of the California wildfires here in Colorado, we had one up north near Boulder that was couple years ago, right after Christmas, which was super, super weird to have a wildfire then, but it literally ripped through an entire town of Louisville, burned down hundreds of homes. Because of stuff like that, tornadoes, hurricanes, insurance has become a vital piece of the closing, of getting your property insured, making sure there's no weird things going on with it. So that's number 2. Make sure you have a rock star insurance agent that's going to get you a good, fair price, able to cover the property. If you're buying specifically here in Colorado or any other state that has it, the mountains, if you're buying in the woods, there might be setbacks that you have to have breaks, fire breaks between the house and the forest, stuff like that.
Well, I had one that was in Bailey. It was that same thing. Something to do with the fire. And once the inspection was done, then they figured they needed fire insurance, and their insurance was going to be like
insanely
double.
High. Yep.
If not even more than double what they thought it was going to be. And they actually backed out because of that.
Yeah, there's multiple things that buyers in a wooded area can do to show the insurance company that it has potential of surviving a wildfire. Again, that's that setback. Metal roofs. Insurance companies look highly upon that, and keeping the forest clear and the roof clear of debris, because an insurance agent's going to go out there and take a look at it, and they can ding you for all that sort of stuff.
So a deal doesn't fall apart, right?
Oh, it can't.
Once it's under contract. Isn't this stuff that maybe like a listing agent, that if you know you're listing a property in an area like that maybe you kind of talk to the buyer's agent about, like, hey, I just want to, so this doesn't come to bite us 3 weeks from now?
A quality listing agent's going to take it a step further and go to their insurance agent and send them pictures and all that sort of stuff. With my team, Dane and I do really high quality drone videos. So I send that to my insurance guy, be like, hey, here's the exterior view of the house. Is there anything additional that we should do to better our position for insurance? So not a fun topic, but it's killing a lot of deals right now, both from insurance companies just saying flat out, no, we won't insure this,
right,
or having super high premiums.
Yeah, that's crazy.
And the third one is sellers during COVID became super accustomed to as-is purchases. Buyers would do anything to get houses, right? That's not the case anymore.
No.
So it's almost flipped, where now buyers are expecting the seller to fix stuff.
Yeah, and sellers are already, because of the competition, they're already getting, I wouldn't say bottom dollar for their house. I would say in Colorado, maybe some of it's more realistic of what the house should be worth anyway, even though it's still too high. But they're like, basically what I was saying is the sellers are like, we're not paying for anything. And buyers are using it for leverage. Like they'll take any little thing to get more closing costs.
Yep.
You know, it's a buyer's market, which is crazy. So to me, it's like almost the greed kicks in on both sides. And, you know, and it's funny to me when you have the seller that's like, I'm not paying for anything, but that same seller is also looking at houses to buy, and they want, on the flip side,
everything.
They want everything, right?
Yeah.
So it's one of those.
So yeah, it's completely a mindset thing. And sellers have decided that, inspections are just for the buyer to know what they're going to do when they get in here, not for me to fix anything.
Yeah.
And that mindset needs to change, because I'll give you an example. We had a client under contract up north, I believe it was with you, Ty Curry, and we asked for a fence to be replaced and for a furnace to be replaced. Not cheap items.
I know, but the fence was falling down.
The fence was literally falling down in a back to road, and they have a child and a dog. So that was supremely important. And the furnace was like 29 years old. And you know,
that's kind of normal stuff.
Very normal stuff, but they are expensive items. So the seller wouldn't move on either one. He said, I'll fix the fence myself, which we weren't necessarily okay with. And they weren't going to do the furnace, which was shocking to me. So we ended up terminating, and the house never sold. And I know that they had already bought a property. I think they may have ended up renting it, but they had already purchased a property down in Texas, the seller. So because of saying no to $15,000 worth of work on a $700,000 house never sold. My clients weren't asking for door handles to be replaced, or these were legitimate items. And so don't let that happen to you if you're a seller. So go out, spend $500, $600, get a pre-listing inspection done. Going into it, okay.
And a good realtor should be able to look at a fence and go, dude, your fence is falling down. We need to fix that.
Anybody should be able to look at a fence and say that.
And then the seller obviously could have fixed his fence, and then it's a non-issue.
Right.
And, you know, if you do it prior to.
Right. Yeah. Those three, I think, are the biggest reasons why deals are falling apart, and what you can do to prevent that from your deal ending up in the graveyard of dead deals.
The graveyard of dead deals. Let's talk about the vampires.
The vampires. Oh,
the vampires, both on the real estate side itself, the real estate side, and the vampires on the mortgage side.
There are vampires in any industry, but we have our own vampires.
Yeah. And what do we mean by that?
So what we mean by that is professionals who are just in it to suck your wallet dry.
To suck the blood.
Yep. So for a real estate agent and for a lender, I think it kind of goes hand in hand. And I said this was going to be a recurring theme, but really pushing that buyer to the tippity top of their qualifications just so they can make an extra buck or two. That is gross. It is disgusting. It is not a sustainable way to build a business because, you know, a year or two from now, when 60% of their monthly paycheck is going to their house, and they can't afford to buy a car, buy diapers, or go on any vacations, guess who they're going to blame?
Yeah.
Their vampire lender and vampire agent who set them up for absolute failure.
Yeah. And I think it's just doing the right thing, right? I mean, we've talked about it so many times in this business. You know, a lot of these people, they need to be educated. I mean, you know, we've done over, you know, we've talked about it, over 4,000 transactions. I mean, you know, you've done, I don't know how many, but a ton. Most of these
Multiple
people, it's either their first or maybe they do 2 or 3 a year or in a lifetime. Mm-hmm. But it's rare that somebody's done 5 real estate transactions.
And typically, if they've done 5, they're acquainted with it. They understand.
Yeah, they understand it.
And they're probably in their 60s.
Yeah. And the crazy thing is right now with all the information that's available to us, you know, if you're a buyer or a seller or whatever, I mean, I would say definitely educate yourself, right? There's so much out there. But you're right. You know, I can't tell you how many times I've seen the lenders that will say it's a VA buyer, and VA, you could push the DTI higher on a VA buyer, and, you know, they'll push them up to 60% DTI and like, hey, man, you're pre-approved up to this. And they don't even have the conversation with them that it's like, you realize this is 60% of your gross income. Like you're going to have
pre-taxes.
No money left over.
No.
I mean, we're talking mortgage. By the time you have groceries,
taxes,
gas,
insurance,
I mean, like you're possibly upside down.
Yeah.
So the only time that I see those deals like that, and they do make sense to me, is if you know someone else is on the deal. Maybe they're not on the deal technically, but they're in the family. And, you know, maybe it's
your wife works.
Yeah, your wife is
husband
self-employed
works.
and she just started and she's killing it and she's making $6,000 a month, but you can't use it. And so she's not on a loan because she's got some debt too. And you're like, okay, we're doing this off of just his income, but you know you've got an extra $4,000 or $5,000 coming in. Mm-hmm. I mean, those situations are fine, but man, I'm telling you, it's kind of sad when you see the person that, I mean, in my eyes, anytime you go over 35 on your DTI, you're starting to get to that possibly being a little bit house poor situation. Yeah. At least you're not going to be able to invest in your 401k and do all the things that you should be doing. So yeah, you got to be aware of the vampires out there. There's plenty of those that they just want to get a deal. And, you know, there's realtors out there, well, and lenders. I mean, we get paid based off of loan size. I get, you know, most lenders out there get paid basis points based off of a loan, just like you guys get paid.
We get paid a percentage of the
sales price.
Exactly.
So bigger loan, bigger purchase, whatever, it's more money. And sometimes it's just not what's best for the client. So
it's almost never what's best for the client.
Yeah. You got to be aware of that.
We rarely go over 40%. Really, the only time I ever see that happening is with the first time home buyer where, you aren't making a ton of money yet. It's a townhouse, something super simple. I don't like going over that number at all. It is so much better to be house poor and cash rich, which isn't necessary. You're still owning a home, but you didn't go to anywhere near the max of what you qualify for. Right. And you can save money. You can improve the property. You can go on vacations, whatever. And then 5-6 years down the line, when you've gotten a pay bump or two, rainy day fund saved, some equity in the property, then let's go get the house that not what's 60% of your DTI, but your DTI has grown. You've matured, your finances have matured, and you can afford that place that you wanted 4 years ago. Now you can get it without literally setting yourself up for financial suicide.
Right. So avoid those. Avoid the vampires. I mean, there's plenty of them out there. You know, again, I just feel like if you shop the right places with the right people, you vet your realtor, you vet your lender, you know, read reviews, look them up on social, see what they're about. I mean, you can learn a lot about people, right?
Yeah.
You kind of see where their heart is and whatnot.
Interview a couple.
Yeah.
Sit down with them face to face. That is one thing huge for your side. I have to be where my client's buying. I'm showing them houses. People don't necessarily have to use a lender in their home city. And not to say that you can't do it, because I know that you lend all over the country.
Right.
But if it's between, using somebody out of state and somebody you can go sit down and have a conversation with, I would prefer the latter, where you can shake their hand, look them in the eye, and get the information that you need. Right. Again, if you find a quality lender out of state, that's all right.
Yeah.
But being able to go knock on somebody's door, I think really, especially for the first one, really can help alleviate that stress.
Yeah, for sure.
And use a realtor who's done it more than once, because sometimes the vampires are accidental vampires where they're just happy to have a deal. They're not pushing you higher, but they're not knowledgeable enough to explain the pitfalls and what to look out for. So there can be some accidental vampires too, who are just vampires out of ignorance.
Yeah.
But work with somebody who's done it a lot.
Yeah, for sure. You got to do that.
Avoid draining your wallet to the vampires of the real estate world.
All right. So the next thing we're going to talk about is the zombie listing. This is more on your side of the table, man. So give us the.
So zombie listing. So what do we mean by that? In today's market, we are getting more and more days on market. It's taking longer to go under contract, especially that luxury price point. And this circles back to having realistic expectations as a seller. Everybody heard their house was worth a mountain of gold 4 years ago.
Yep.
That you could list it for whatever you want. You didn't have to prep it. You could hire the cheapest realtor out there and you'd get top dollar. Well, guys, times have changed. If you specifically, and I cannot harp on this enough, if you overprice your listing, you are cutting yourself off at the knees and purposely making your house a zombie, where it will just chug along with no sense of direction for months at a time. And you're going to be looking at your real estate agent like, what are you doing? Why isn't this selling? Well, Mr. and Mrs. Seller, if you had a good real estate agent, they would have said, I understand your neighbor sold their house for $200,000 more 3 years ago, but property prices have come down, stabilized, come down, whichever, but we're not going to get that now. And yes, you do need to prep your house. We do need to have that carpet replaced. You should have the interior painted. You should hire a stager, that sort of thing, where people weren't doing that before. Now you have to do that, or your listing's going to chug along. And, maybe you list for $1.5 million when you should have been at 1.2. And then you come down, and then guess what? You're 200 days on market to get to where you should have been.
Right.
Now the market doesn't think you're worth that, because they saw all these price reductions. So then you end up at 1.1 when you should have, from the get-go, had a realistic vision of what your house is worth, not based it off of comps from 3 years ago, and prepped it the right way.
I feel bad for you guys in the manner that I see this happen all the time. It's not always a good realtor. It's a lot of times you guys will get the client that just doesn't listen, and they don't want to listen. Mm-hmm. And you don't want to lose the listing, but there's a piece of you that's probably thinking, man, I should probably just walk from this, but most realtors won't. And I guess what really sucks is you'll end up having that client that won't listen to you, won't drop the price, won't do the things you did. The home will sit on the market for 180 days. And then next thing you know, they hire the next realtor. You're no good. You're fired. They hire the next realtor. That realtor tells them the same exact things, and they end up doing it after for the next realtor. Then that realtor gets the house sold.
Yep, that happens all the time.
It sucks, man. That would be the one thing that would upset me probably the most. I would almost rather probably be that realtor that looks at it and goes, how much is it going to cost me to list this home for the next 120 days? And if you realize that client's not going to do it, you just look at the client and go, hey, I tell you what, why don't you hire the other realtor? When it doesn't sell in 120 days, then you hire me and do the things that I told you to do.
Yeah. I mean, that genuinely is the way you should handle your business.
Yeah, it's just hard to.
But it's very difficult to.
Yeah, it's hard. You don't want to just give it up.
Yeah. And especially if it was a referral from somebody, like if you handed off, hey, I got this guy who needs to sell his house before he can buy. And it just happens to be that really stubborn, I know better than you seller, which does happen quite often, actually. And you feel obligated to take it. Whether it's going to completely screw you over or not, I owe it to G to see this through. So it can be really, really difficult to manage that seesaw. That's what it is. You're trying to balance, okay, here's what's actually best for my client. Here's their expectations. and you try to find that middle ground, but you don't want a zombie listing. I mean, last weekend, I was going to go show somebody over in Aurora. House had 6 offers on it already. They did the right things. They prepped it. They had great marketing, and they priced it right. And that still happens.
And because they priced it probably right, meaning maybe a little below market, then they created...
Yeah, they were over asking before we could even go see it.
Then they created, in a market that's unheard of to get over asking, but think about it. I mean, you price it right, you prep it right, you got a move-in ready, beautiful home. You're going to have people, because there's not a lot of those out there.
There's not a lot.
So you're going to have people
Every house has issues right now.
Yeah.
So if you take the advice from earlier, get that pre-listing inspection done, prep the house right, hire an interior decorator, a stager to really make it pop, spend a couple $1,000 on new paint, that kind of thing. You can absolutely get over asking in this market.
Listen to your real estate professional.
Just as easily, you can overprice it and never sell it and be out time, money, energy, leaving the house for showings.
People don't also understand the cost associated with carrying the mortgage for an extra 6 months and end up carrying the mortgage for another 6 months. You end up finally
There's $25,000 in mortgage payments.
You finally end up selling it for what you probably should have listed it for to begin with. Then you had to give seller concessions. I mean, I just find it that you're always better off just probably listening to your realtor, pricing it where it should be, and just get it sold.
Yep, absolutely. Don't be a zombie listing.
The phantom closing cost.
Not fun, but I think a less talked about issue in real estate.
It is. You know, there's one thing that I've always, when I get a new customer and once we go under contract, I've always had my way of getting current client referrals, right? I make 3 promises and I ask them to make me 1. You know, I basically say, look, we're going to close on time. I don't miss my closing dates. So you don't have to worry about your earnest money. You don't have to worry about, lock extension costs or moving costs or anything like that. We're going to close on time. That's a guarantee. Secondly, I always say the communication on a scale of 1 to 10, 10 being the best, that's what it's got to be. So you call me, I'm going to call you back. As far as knowing your numbers, knowing everything, you're going to get that. And then last, there will be no surprises at the closing table. If for some reason something costs more or there's something that I didn't discuss with you that's basically something that I messed up on or whatever, I will eat it myself. Yeah. I'm not going to put that on you. Unfortunately, in our business, that doesn't happen a lot. You got the guys that sell on rate and payment, and they only focus on rate and payment, and they don't talk about what that is possibly costing the borrower, or
if they're paying for points.
Yeah, or you'll see somebody that's has no business being in an FHA, but they're like, this is a better deal because they sold them on the FHA payment, but they didn't tell them about the 1.75% FHA funding fee that's getting rolled into the loan, which can be
significant.
On a $400,000 loan, that's $7,000.
Yeah.
$7,000.
What's conforming, right? I mean, you can go all the way up in Denver to north of 800 with FHA.
It's 819 now. Yeah. It just got changed. It's wild. 819,000. So, you think about 175 on that. I mean, that's $15,000.
Yeah.
Unfortunately, there's a lot of that out there.
Yeah. And if you are working with a real estate agent on either the listing or the buying side, and they don't mention getting an estimated seller settlement or buyer settlement statement prior to closing, fire them, because that comes directly from the title company. It's not something the listing agent or buyer's agent put together, where it has all of your closing costs on it, all of them, the funding fees, the appraisal fee, the doc transfer, water transfer, all those fees are all laid out on it, and you get to see your number at the very bottom. Now, those can change during a transaction, but the estimates I rarely see change by more than $100 or $150. You should know within a dinner, the cost of going out to eat, you should know within that of what your actual real world closing costs are going to be.
Yeah. And like you said, within a few $100. Yeah. I mean, there should never be any big surprises. There's always some of the things that we don't know. Like if you're buying a property that's got HOAs, and maybe there's some big
that's the biggest one.
There's some big HOA transfer fee that we didn't know about or whatnot. But other than that,
status letter fee and all that stuff.
Yeah.
We should have done a segment on brain eating HOAs because that's really what they do. But we won't do that one today. But maybe me and HOAs, I like HOAs, but a lot of them I think are predatory as heck.
Oh, yeah.
And especially now with some of the communities here in Denver where they roll it directly into your taxes, it's become shady at best.
I mean, as we talk about the phantom closing costs, what would you say is the one thing to do to avoid phantom closing cost.
Getting that estimated settlement statement would be number one. As a seller with the NAR settlement last year, you will know exactly how much and where the money is coming from to pay the buyer's agent and seller's agent, or if you are. Having that, I think, is vital. Yeah. Absolutely vital. And it can be done at the time of, you can do it at the beginning. Again, there may be some things missing, the HOA stuff, or there might be a couple lender things, but you can kick that right off at the beginning. And then maybe 2 weeks into it, you get it again. That will alleviate all fears, all stress, all unknowns, so you can really plan for your future. I think that has to be number one. And as we've said 974 times on this channel, make sure you're working with somebody who knows their crap.
Yeah. And from the lending side, I mean, I would just say make sure that you at least review an itemized fee sheet with your lender in the beginning. Again, some of those things could change, but just make sure that you're at least going through it to know that it's not just rate and payment. That rate and payment could be costing you a lot more money than you should be paying. So make sure that you go through and you understand the cost and fees associated with that rate and that payment. So.
Yeah, absolutely. No phantom closing costs.
No.
Know exactly what you're looking at.
Now we're going to talk about the lock-in curse.
The lock-in curse.
Yeah, so I deal with this a lot on my end. The lock-in curse. When to lock, you always have the client that they want to lock to protect themselves from rates going up. But of course, if rates go down, they want you to be able to honor a week out of closing. They want you to be able to honor the rates of that day or whatever. Let's just say rates dropped a half a point. And, I can honestly say, man, if it would make my life so easy if I could just lock people in to protect them from them going up, and just be like, oh yeah, man. I mean, if rates drop a point, we'll just give you a new rate, and whatever. But it just doesn't work that way. I mean, once we lock in a rate, we're guaranteeing that rate to secondary, and so it gives us kind of a black eye if we have to mess with that. I mean, fortunately for us, we do have a float down policy, so where it's not exactly where market is. Sometimes it's kind of a meet in the middle. Sometimes it's a little better depending on how much the drop is. But I know some lenders don't have that at all. But just know, if you have a lender that you trust and they're looking out for you and you're okay with the payment the way it is, and they're trying to protect you, because the last thing we want is for that client to, the worst thing is when the client's like, hey, we have the house, we're under contract, you're talking rates, whatever. And they're like, well, let me think about it. And they get back to you a day later and rates have moved.
Yeah, you're gambling.
And they've gone
You're
up.
gambling with a 30-year payment. Take your lender's advice.
Yeah.
And nobody has a crystal ball either.
Yeah.
Like, none of us can see exactly what the future is going to be. But if you're a lender who, again, is looking out for your best interest, says, you know what, based on my knowledge, my experience, everything that I'm researching, I think now is the time to do it. Listen to them. And if they go up, don't blame them. I mean, if Garrett could see the future, I promise me and Garrett would be on a beach right now after winning the lottery 45 times in a row. So
it's tough.
Just understand that your lender can only work with the information they currently have and work in your best interest. So follow their advice, but if it does change, don't crucify them over it, because if they would have known, they would have told you to wait.
Yeah. And honestly, if you talk about it and it's what you like and you're comfortable with it, just go ahead and lock it in. I'm not a gambler, and I can tell you, I don't know how many times, again, where like right now we're premium pricing a lot of our loans because we feel like the market over the next couple of years is going to continue to drop. So my big thing is we don't want to pay money for a mortgage right now.
Right.
I mean, it's crazy to pay $3,500 for a mortgage when chances are I'm going to be refinancing you in 6 or 8 months anyway.
Right.
But that I could quote you a rate of whatever, 6.5, and say it's paying back $3,500. And you're like, well, let me talk to the wife or whatever. And the next day you call me back. That rate could be 6.5, paying back $1,000. You just left $2,500 on the table because you waited till the next day. So it literally moves that much. And so the only thing I can say is, and to avoid issues with that, is if you like your payment, you're okay with the rate, and you like what it's paying you back, it's a free loan, you're going to be getting out of it in the near future, just go ahead and lock it in and be done with it. Don't
and I know you have a lot of clients who probably listen to you when rates dipped down into high 5s, low 6s this last month. Yeah. And you were all over them to get it locked, and they locked. Yep. And now rates are up at 6.5, and they're doing the happy dance.
And there's some of those that didn't call me back. And literally in 2 days after the Fed rates went up like 3/8 of a point. And it's like, well, there went that drop. Yeah. So anyway, don't be those people.
Don't get cursed by your rate lock.
Just if you trust your lender, listen to them, take their advice. We do this every day, all day. Just do it.
Yeah.
So like Nike.
Yep.
Just do it.
Just do it.
So the last thing on our list today was the trick-or-treat scams.
Yep. Is it a trick or is it a treat? Here in real estate,
well, if you work with Garret and Chad, it's a treat.
It's always a treat. He'll do some tricks for you though, Well, in real estate, not just today, but forever, because it is the largest financial decision of somebody's life. It's rife with crappy people.
Yeah.
And it's not just the professionals. It's buzzards flying around looking to pick up the scraps and scam people. Mm-hmm. So some of the most notorious scams in real estate, the number one is wire fraud. And to explain what that is to people, I actually have had 2 clients now try to be scammed. One of them was a hacker, hacked into the title company's files. They were able to pull all of the buyer's contact information, their address, the address of the home they're buying, everything they needed. They were also able to somehow dox it as if it were coming from my email address. And they sent an email to my client that said, "Hey, Joseph." This gentleman's name was Joseph, but I've known him my whole life and I've never called him Joseph once. His name's Joe to me. I've never called him Joseph. So it said, "Hello, Joseph. Title needs your closing costs and down payment early. Please send ASAP to this account number with this routing address. Thank you, Chad." And it had my email tagged to the top of it. I don't know how they did it.
But that's a stupid scam to me, because most people they're going to pick up the phone and call you and go, what is this? Why are they needing my money early?
And this was a second home purchase of I want to say we were probably 28, 29 at the time, but I'd helped them buy a house already. They had sold their home. They had the funds from it, and we were closing in like 4 days. So they were putting down over $250,000. Had I not talked to my client about wire fraud, had they not been intelligent enough to pick up the phone and call me, genuinely, they could have sent $250,000 to somebody. It would have bounced all over from Mexico City to Sydney to Tokyo to Dubai and then vanished, because that's how they do it. They bounce it around to like 20 different bank accounts super fast so that it can't be traced. And they would have been out over $250,000. And this happened to every transaction that title company had going on, that they were able to do this. So I got involved with the Colorado Bureau of Investigations and the FBI wire fraud divisions and gave them all the information that I had.
And they probably didn't do anything with
it. I talked to them a couple of times. I doubt anything happened with it.
Yeah.
Because I don't know why they don't take that stuff more serious.
That's pretty lame, though. I mean, because I've heard a lot worse than that as far as like how it goes down. Like, I always tell my client, call the title company directly and get the wiring instructions verbally.
Yeah, and you initiate the phone call.
Yes, and you initiate the phone call, because there are literally hackers or fraud masters or whatever you want to call them out there, vampires. They know your closing date. They're smart enough to know that typically you wire the money the day before, and they will send you an email that looks like it came from the title company. This is your wiring instructions for tomorrow's closing.
Yep.
And it looks legit.
Yeah.
And people literally have lost hundreds of thousands
Mine
of dollars.
Mine had my email. They could see the email communication, so they created my email signature. Yeah. It looked like it came from me.
Yeah. But the whole, we want your closing costs and stuff early or whatever.
It was a day. It may have been 2 days, 3 days early. It wasn't significant. It wasn't like 3 weeks where you're like, what the hell? No, it was within 72 hours of closing.
Yeah, that's crazy.
And so that made me want to throw up. I was terrified for them. I was super happy they didn't do it, obviously.
Right.
And it all worked out.
Yeah.
But it happens. There's a reason why we have wire fraud disclosures, because people get got when it comes to that stuff. So just be super, super cognizant of wherever you're sending money in real estate, or getting it, really, who you're giving your account information to. Just be that crotchety old man who's worried about everything when it comes to that piece. Again, it's your biggest financial asset. Don't lose it.
Yeah. And the only thing I can say about scams on my side is, there's the trigger lead thing that I think is going to be going away pretty soon. I think they've recently initiated some sort of a law against it or something like that. The trigger leads are going away. Like when I pull your credit, the credit bureau sells your information. So all the bottom feeder lenders out there, they see that your credit's been pulled for a mortgage, and then you start getting blown up with like 30 phone calls. And most of those calls are like, well, hey, is your lender getting you 3%? And so all they want to do is get you on if they can just get you on the phone phone and get you interested in whatever it is they can throw at you, then everything ends up changing. And like I said, it ends up being...
Those are the straight up vampires.
It ends up being smoke and mirrors and all that stuff. And there's the scams after you buy. You'll get stuff in the mail that looks like it came from your mortgage company, and it'll say urgent, regarding your mortgage and things like that. Those are just scams. Like, you'll look at the bottom of it because they have to put it, or they would be illegal, which to me is it's scamming anyway. But it says we are not associated with Sunflower Bank or whatever at the bottom.
And in like 0.2 font, you need a microscope to see it.
Exactly. Yeah. And so I have clients all the time. They'll say, "Hey, do I need to pay attention to this?" I'm like, "No, it's a scam."
Yeah, and they'll look like first payment coupons and stuff like that.
It's
saying, hey, we sold your loan to this person. You need to send your stuff here. A smaller one in real estate is getting a certified copy of your deed.
Yeah,
that one's like $100, so that's not super big.
And it's not
but you get that at closing anyway,
because technically they're giving you something for money, but it's a scam because you get it anyway. So.
Yeah, and the last one I would say is looking out for scammy wholesalers. There's people who will get properties under contract, wholesale them to buyers. This isn't as big of a thing these days. It was a very popular way on YouTube to make money in real estate. And it's always felt super scammy to me. It's not, you're not being true to the seller.
What is it? Did you just come in and pay cash for a house?
You sell the contract during the transaction. So these guys would go under contract on a house and then turn around, find a buyer. The buyer would pay. When it was really, really hard to get under contract, these guys would place the property under contract and then sell that contract to a buyer. That was always super scammy to me. It's typically more expensive. It's not truthful to the seller. It's not a huge deal, and they've fallen by the wayside, but I'd say stay away from wholesalers. They're a type of vampire too. We're just looking out to make a buck and don't really provide a service.
Yeah, and usually it's always that too good to be true deal, right? Like I've always said, if it smells like a fish, it's a fish.
Yeah.
I mean, just, you got to know that. There's not those, beautiful unicorn deals out there. So anyway, what are you doing for Halloween? You got little ones.
Of course, we're going to take the little guys trick-or-treating.
Yeah.
And I think we actually might do a full family costume this year. They got super into Teenage Mutant Ninja Turtles this year. And what's funny is...
I can see you as a big-ass turtle.
Yeah, and we talked about how kind of everybody's vibe in my family, there's 4 of us, and we all kind of have our turtle. Mikey's the crazy, fun-loving... That's definitely Carter. There's Donatello. He's the smart one, the engineer. That's 100% Landon. Kylie can be fiery, a little intimidating. She can be a little rough around the edges, so she's 100% Raphael. I don't know how much you watch Teenage Mutant Ninja Turtles.
Not a lot, but it was
my jam as a kid. Yeah. And, kind of pulling in a little bit of the Bible, a little bit of Christ. The father's supposed to be the leader of the household,
right.
So that means I get to be Leonardo.
I like
the blue one. So we're leaning towards Teenage Mutant Ninja Turtles, which I'm kind of stoked about. I'll get dressed up for Halloween for my kids. I don't care.
Heck yeah, man.
I'm a big old goofball.
Yeah, that's the fun part. I mean, I never was into like the Halloween parties and stuff like that, and dressing up to go to parties and stuff. I don't know.
See you getting.
It just never was my jam, man. I never was that guy.
No.
I mean, no, mine were
You're
always
scary enough in your day-to-day life.
Yeah, mine was always pretty simple. I mean, I think one year at a frat party, I think I put a white T-shirt on, put a big P on it, blacked my eye, and I was a black eye P. I've had some other ones that I probably I don't want to discuss on online, but yeah, I've just never been that guy. I don't like to dress up.
I think it's a bunch of fun.
To go trick or treating with the kids, that's a whole
gas.
different deal, right? Yeah, that's fun.
Except for in Colorado, where you have to plan your costumes with a parka sometimes.
Yeah,
because
there's
been a couple snowstorms we've gone trick or treating in, but
yeah. When we have the kids, our little neighborhood here, that's a fun little trick-or-treat neighborhood. But
you guys got lots of kids?
We do.
Good.
We do.
I think it's so much fun.
When we don't have the kids, I mean, Rachel loves to give out candy, but there's been a couple of times where we put a bowl out there and say one.
Please take one, but it's gone in 10 minutes.
Please take one, and you'll see it on the Ring camera, and there's like these kids going and just, handfuls in their pillowcases.
Yeah.
Yeah, that was probably my son, but yeah, it's fun. But, and you guys, you're doing a cruise.
Yeah,
next week?
yeah, we're leaving for
like
a
Halloween cruise.
Saturday. I hope not. I just want to relax in the sun. I don't need any ghost ship situations. What's that?
You don't want the poop cruise?
I don't want a poop cruise.
Yeah,
and it is a Carnival cruise, so there's a little bit of. A little bit of worry for that because that's what they're notorious for now, thanks to Netflix. But no, we're going out of California next week, and we're going down the Baja Peninsula. Never been there before.
Good for you, man. Excited. That'll be fun.
It'll be a ton of fun. Hey, go Tigers and go Broncos.
Yes.
Hey, we're in the middle of the season. The Broncos just pulled up the upset in Philly.
That was huge.
That was incredible.
That was huge.
At halftime, I was so over it. I was so annoyed.
Yeah, that was huge.
And by the end of the game, you can ask Kylie. I was pacing back and forth behind our couch watching it. It was
big win.
Yep. And LSU didn't pull it off versus Ole Miss, which is okay.
Yeah.
They can still make the SEC championship. And they got who they got this weekend?
We got South Carolina.
Okay, that's a W. At home?
Yeah.
In Death Valley, that's a W.
They're a good SEC team, so we'll see. I don't ever look at any of them and say that's a win. Like, you just never know.
Not against SEC teams.
Yeah,
You're
just
probably
never know.
right.
I mean, and
I don't know, maybe when you're playing Kentucky, but everybody else, even Vandy's.
Yeah, Vandy's good.
Yeah,
so you never know.
16th
but
last week.
Hey, we'll cook up something good to eat on Saturday and watch some.
I'm not going to watch any football. I'm going to be too busy on a cruise ship.
Yeah, that'd be fun. But hey guys, seriously, sometimes these aren't, super heavy or probably anything that's crazy. We hope that it was good information for you. Maybe you could take some of this, and if you are buying a house, we'd love to help you. But if you're watching this from somewhere else and we can't help you, just make sure that you don't get the vampires or the scams or the
zombie listings
or any of that
closing
fun stuff.
Costs.
If you do go out for Halloween, please be safe.
Don't drink and drive.
Yeah.
Have fun with your kids.
Share the show. Seriously, if you like it, just share it. We'd really appreciate that, and we'll catch you next time.
See you guys.
Peace.